Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, it's been a week of economic obstacles for the Australian dollar and for many other currencies. As the market dodges the Reserve Bank of Australia's 50 basis point rate hike, the market attempted to climb higher after rebounding off the bottom side of this range here around 68.70-75. In light of the pattern, I still feel there is further upside potential. However, we need to clear that level of 69.95, which was briefly looked at on Thursday, and if so, could give further exposure up towards 60.65 as a potential target. Any pullback, as I mentioned, market sees or views support around 69.25 and 68.70-75 as a base. Well, all eyes on the US job numbers or the non-farm payrolls this evening, with the Labour Department expecting to show whether employers kept hiring in July after posting 372,000 jobs back in June. With the forecast currently holding around 250,000 and the unemployment rate is expected to hold steady around 3.6, it really depends on the number. If we get a greater number than 250,000, that could strengthen the US dollar. However, a weaker number would give further indication of a potential slide. Nevertheless, I feel from a technical point, and putting aside the non-farm payrolls for the moment, that we have respected that bottom side range of 101.1535, and now looking towards this top side, which is held for 14 days at 102.7080. Now a break there would give further indication to the top side and look towards 103.40 to 104 figure 30. Also, the dollar index, which measures the greenback strength against a basket of 6 major currencies, did tumble overnight from the 106 region down to 105.60. Keep an eye on these technicals as they are still remaining somewhat potentially positive, and therefore should keep that focus to that top side. Looking at the dollar yen story, well, with a slightly weaker greenback, the market gyrated lower and now holding just around this region, which is seen around 132.5. I do feel from a technical point that we are looking for a potential downslide, that is, if his technicals hold underneath the midway point on the RSI and look towards the region of 131.50-60 and maybe even where the subjective holds around 129.70-80. What will turn this all around and keep the bulls in play is if we see a close above 134.2040, as this would reinstate the move up to 135 to 136. Looking at sterling, well, as widely expected, the Bank of England delivered its 50 basis point rate hike, lifted rates from 1.25 to 1.75%. In light of the market expecting as widely to see the 50 basis points, we saw very whipsaw price action overnight. However, did respect the level of 120.6080. Now, as long as we maintain above there, the call is towards 122 to 124. But with the risk events into tonight, do keep an eye on these technicals, because a break of 120.60 would be a little bit devastating for the bullish case and maybe reopen the downside to 119.5. Gold aspect, well, it did survive the level of 1,755 challenge, and from this very strong candle coming through has nearly claimed its upside target of 1,800. Do note though, I'm seeing some divergence when it comes to the bear case, and what I mean by that is as the market prices higher highs and the indicator goes from higher to lower, is that we could see a little bit of a pullback and therefore look towards 1,776 to 78. And maybe even a little bit lower down to 1,766 to the base, which is 1,755. If we do see a break above 1,800, figure 6, I'm neutral, and I feel the market will actually maybe progress further up towards 1,820. But as I mentioned, bit of a key level. This is where the market bears came back into the play when we saw this heavy tumble. So we could see a little bit of supply coming back into the market from this region. And wrapping up with oil, the downside call was met at $88 a barrel. Well, actually, more to the point, it was exceeded after printing a low of 87.14 this morning. I would feel that as presently we are oversold, but from where we stand, I'd rather sit out and pretty much remain neutral at $88 because we have come around $11 from the fall of, or $12 nearly, from the fall of 99 to 100 and down to that 88 region. So I think it's time just to sit out just for the short term. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the new weekend.